Hi guys, welcome back to my channel. Kelvin here. Just last week, the S&P 500 had done something spectacular. It had recovered back to all-time high. Yes, that's right, despite record high unemployment, ever-climbing pandemic numbers, stimulus talks failing to reach an agreement, Pinky, the brain, and some random guy threatening to destroy the world, the S&P 500 has broken the new record for having the shortest bear market. And of course, every time the market goes up, there will be so-called professionals saying that there will be another crash. So will there really be another crash? And if so, how should you invest right now? There's a lot to talk about, so let's start right now. Here's a bit of context. In January, the pandemic started infecting people in the Western countries. Just a few weeks later, end of February, the S&P 500 started what will be remembered as the fastest drop in history, triggering one circuit breaker after another. In just 18 days, the S&P 500 had reversed 3 years worth of profit. Then, all of a sudden, the US decided enough was enough. They announced the stimulus package, and our MEP, Jerome Powell, activated the unlimited money printing cheat code and announced that the Fed will be buying up asset classes across the market. Miraculously, not only did it stop the free fall, but it started one of the most godlike recovery of our time. Meanwhile, many professionals were convinced that the market could still fall month after month after month. If you haven't noticed it already, the analysts are just as bad as all of us when it comes to predicting how the stock market will move in the short term. So much so that a guy named Jay Bowman plotted a chart of shame to show how the market went up every time a professional shouted that a crash was coming. It kind of reminds me of a time during Chinese exam when I don't know what to write for my Chinese essay, so I had to throw smoke bombs in order to meet the word count. So I wrote, 在一个风和日丽的早上，小明在呼吸. Now, a huge reason why so many professionals are always caught off guard is because every market crash are different. Sure, all market crash are caused by fear and panic selling, but every panic sell were triggered by something different. Like the 2008 market crash was caused by the collapse of the financial sector due to banks selling bad debts. The 2000 market crash was caused by the dot-com bubble burst, where many investors were FOMOing into any stock that has a .com in it, driving stock prices to sky-high level. On top of that, each crash took different time to recover. Sure, you can say that on average, each crash took 14 months to recover, but average doesn't tell us anything. It's like saying between one male and one female, the average amount of testicles is 1. Some market crash took years to recover, while the most recent crash just took 6 months. So why did the stock market recover despite everything looking so gloomy? With all the shutdowns, GDP dropping, sky-high unemployment numbers. The first thing you have to know about the stock market is, the stock market is not the economy. If you look at the top 5 holdings of the S&P 500, you will notice a few things. First, Microsoft, Apple, the number 1 fruit company in the world, Amazon, Facebook, and Google. They are all tech companies, and second, they occupy over 20% of the S&P 500, while the remaining 495 companies occupy 80% of the value. Now, the top 5 tech companies had crushed all expectations. Apple revenue went up 11% from a year ago. Amazon revenue went up by 40% due to more people buying stuff online. Facebook revenue also went up 11% from a year ago. Microsoft revenue went up by 13%. And even though Google's revenue dropped, they still beat analyst expectations. Meanwhile, more than half of the remaining companies are still down year over year. But that didn't slow the S&P 500 down by any bit as it climbed steadily to break all-time highs. You know what all this looks like? It's like that school project in college where you were the one doing all the hard work and your teammates are either missing or relaxing. And yet, you guys still scored an A+ for the project. True story. However, if you look at the S&P 500 Equal Weight Index, where every company has an equal weightage, you will see that it is still down 5.43% year to date, which actually reflects a better picture of the economy. So now, here's the thing you have been waiting for. Should I wait for a crash, or will there be a crash? With Ray Dalio warning of a possible crash in the future, and with reality way off from the exuberance of the market, with many companies still being affected by the pandemic, and the vaccine still in development, the situation may continue on for a while longer, during which there may be more crashes, right? If you are looking to me, a random YouTuber who barely surpassed 1,000 subscribers and is still learning how to invest, to tell you whether a market crash will come or not, here's a short version of the advice.
It's time to stop!
As I have shown just now, even the professional Wall Street analyst whose full-time job is to study the market can't get it right most of the time, What makes you think that you or I, an average investor, can somehow predict the market? I bet even Fatcore can't do it. But here's some good news. If you take the S&P 500 chart and zoom it all the way out, you will notice this. It has always gone up over the long term. There were so many bad events like World War I, Great Depression, World War II, Korean War, Cold War, Vietnam War, White Walkers invasion. Got you there, just checking if you were still paying attention or not. Anyway, despite all the major negative events, the S&P 500 kept climbing up. In fact, if not for the pandemic, the last bull run would have still continued on. It has been found that S&P 500 has never once delivered a negative return over 20 years. Meanwhile, eToro, a trading platform, found that 75% of traders lose money. It may be counterintuitive to you. The more you try to buy and sell, the more likely you are going to lose money. But if you have just held on, go do something else that's more productive, like watching funny cat videos on the internet or tapping the like button to help support the channel. You'll be making a profit on your investment instead. Like, just imagine if investors didn't panic sell during the March crash. Right now, they are already back in the green. Or if you had bought at all-time highs right before the 2007 crash and have just done nothing, you would have more than doubled your money by now already. But if you were on the sidelines trying to wait for a crash year after year, you'll be missing out on the best bull runs of our time. It was found out that most of the best recoveries are within 2 weeks of the 10 worst days. If you have missed the 10 best days out of 20 years, your return would have dropped by more than half. Miss out on the 20 best days, it would already be in negative territory. Sure, by timing the market perfectly, you will have the best returns. But unless your first name is Shen Ye, last name Chai, you might as well forget about doing it, because no one has been able to time the market perfectly. If you are timing the market all the time but got it wrong, like me who's trying to time the stance but somehow always miss by 1 second, your returns will be much worse off than someone else who is consistently buying in every month. With that being said, what do I personally think? Will there be a crash? I will tell you my own prediction, but this is not financial advice. If you think it is, let me remind you again.
Stop it. Get some help.
First, our legendary god of investing, Warren Buffett's indicator, has warned that the market is overvalued now. Second, if you look at the S&P 500 chart, plot in some fancy line, you'll see that there's a bearish ascending triangle forming, signaling that a drop may be coming. Third, the fear and greed index is now showing greed, and you know what Warren Buffett always say, be fearful when others are greedy, which means that he is telling us to be careful. Fourth, and this is the most interesting part, did you know that the stock market has always correctly predicted which US presidents would win 85% of the time? The theory is this: if the stock market ends up green 3 months leading up to the presidential election, the current party will remain in power. But if the stock market ends up red 3 months leading up to the election, the current party will lose. For example, in 1932, when the Republican Party lost, the market was red. And a few years after that, the Democrat Party continued to be in power. The market was green 3 months leading up to the election each time. Even the previous election, when no one expected Trump to win, the market was red, meaning that it correctly predicted that the Democrats will lose and Trump will win. Out of the past 23 elections, the market was right 20 times. Is this just me, or is this all Illuminati? Right now, the polls show that Joe Biden is more likely to win, which means that from now till the presidential election in November, the market might possibly, maybe, perhaps deliver a negative return. So with these 4 events, Buffett's indicator flashing red, S&P 500 chart looking to break down, many investors are getting greedy now, and Biden winning in polls, here's my non-financial, not to be taken seriously, fun opinion. The market will go down. But again, I would like to remind you that I don't know where the stock market will go in the short term. Same like I don't know what my favorite Cai Fan store will cook tomorrow. All I know are 3 things. First, my favorite Cai Fan store's food will still be good. Second, no one knows where the stock market will go in the short term, but in the long term, stocks always go up. Third, the Cai Fan store auntie will continue calling me Soiker. So what should you do now? Always remember this rule in investing. Keep calm and invest on. Timing the market almost never works, so continue investing when the market goes down and continue investing when the market goes up. At the same time, always keep 6 months worth of emergency funds at all times. You don't want to be forced to sell your stocks at a loss if you lose your job. Also, always keep extra cash in your war chest ready to be deployed at all times. If the market crashes and everyone is panic selling, that is time where you should buy as much as you can. Remember that riches are made in recessions. Rather than being afraid of market crash, you should actually look forward to them. It's like the Grand Singapore sales where everything goes on a massive discount. You certainly wouldn't run away from discounts at the shopping malls. So why would you run away from discounts in the stock market? Sure, maybe you have paper loss for a few months after buying in. But when the stock market goes back up, you'll be glad to know that you have bought in at a massive discount. Next, always be prepared to hold whatever investments you are buying into. Warren Buffett has once said that if you are not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Only buy into good companies and be confident of your decisions. If you just consistently do all this stuff, you will already do well compared to all the other average investors out there. And that's all for today. Let me know down in the comments below, what do you think? Is a crash coming? Like, share and subscribe as I'll be posting new videos every Monday. See ya!